Greetings, everyone. And this is Eric and Tim. We're back for more small plates of accounting. So, this is your opportunity to eat up some budget information. Was that a dad joke?
It was,
Okay,
yes.
well, you can erase that. One of the first things we talk about is where you get the information. And so, for us, there's a handout. We call it Small Plates Planning Budgets 1. You can follow our this information in the context of that particular problem. So we think of this as a comprehensive problem that hits the highlights of most of the budget information. And as always, we'll do these in small plates so you can get pieces as you go along. So this particular voiceover is going to be about our sales budget. And Eric, we've got a setup up here where we've got several assumptions that people have to make before they even think about a sales budget. So I've got three highlighted, and you may have other ones, but I certainly think about the sale price. What's our sale price? How much is our sale price? How much of our sales are going to be cash sales? And then what do you think our sales in units are going to be? So, are those the three that you tend to think about?
Yeah, sure. They, essentially, it's all just a guess. We have this big crystal ball that we call marketing and sales, and we just kind of ask them at the beginning of the year what those assumptions, what assumptions are reasonable, and those are the three that are kind of salient, stick out.
So, one of the things I talk about in terms of the marketing department is the idea this is also a source of power for them because they have this information and so many people depend on it that it gives them a way to kind of guide everybody in the organization.
Those are the three most powerful assumptions that drive the entire budgeting process.
Oh, the whole thing is hinging on this. So
Yes.
so if sale price and volume or units, those we have to kind of give you in terms of any problems that we would ask you to do. But one of the other ones that I think is perhaps underappreciated is this idea of cash sales. And so let's talk about that just for a minute. So what happens if everything is a cash sale? Is that more or less risky?
Certainly less risky. Cash is king. Yeah, give me cash on a barrel. I'm good.
So if I'm selling you my Yeti cup, and you tell me, oh, here's the cash for it, or if it's I'll give you cash when I get around to it, then which one is less risky?
Certainly the cash is much less risky.
Okay, especially working with me.
Yeah,
All right.
I know
We
you
have
live.
we have the same experience with Tulane basketball tickets. Anyway, be aware certainly that this percentage at 100%, you're protected against credit risk. If I go down to 0%, what does that mean? Everything's on credit?
Everything's on credit, yes.
Okay, so you've been willing to accept the credit risk associated with any of your customers, but probably there's somewhere in here where you say, okay, a better number is maybe I will allow a 10% cash sales just to get a down payment or deposit on things, and then people will pay off the rest. In an economic environment where things are not going as well, do you anticipate having more or less of a deposit or a cash sale?
Things are not going well. It's going to be less.
Yeah, so we would have a lower amount. So think about that in terms of when the next time you see a car dealership advertising to come buy some cars. Remember, zero down, same as cash. All of those things are interesting ways to talk about this idea of credit risk. So take us through some of the mechanics here, Eric. And so if I know these are my units right here in terms of sales, so marketing has estimated that in July we're going to sell about 6,000 units of whatever it is we're making. And we've got a sale price for each of those units of $5. Can you walk us through the rest of July in terms of how we finally get down to our credit sale number?
Sure. Yeah, we have 6,000 units that we're selling at $5 a piece. That's going to give us a total revenue of $30,000.
Okay, so the 30,000 is just what we're used to seeing in our cost volume profit or variable costing income statement.
Correct.
Because you got the volume, you got the sale price, and then you got total sales. So it's that top line, if you will,
Yes.
of that variable costing income statement. Now, how does we've taken care of two assumptions at that point.
Yep.
Now, how do we deal with that other one that you were talking about, the credit assumption?
Right. So remember that revenue is not cash, and so our revenue, our total sales are 30,000, but we only have $3,000 in cash sales.
So you got the 3,000. How?
That's our cash sales.
Okay.
So
And what was the calculation to give me the 3,000?
the 10% of our sales are cash.
Oh, okay. So you got this 10% times the 30.
Yep.
And then that gave me my 3,000.
Right. So we have 3,000 in our pocket right now,
Oh, okay.
and a $27,000 promise.
Ah, so somebody has promised me this 27,000, and I hope they're going to pay me. Well, do you expect them to pay me immediately?
Not immediately. Over time, you know.
Okay.
And even when they do pay me, I don't expect them to pay 27,000 in one chunk.
Okay, so they might pay it over a few months or a few weeks or
Yeah.
whatever, but we expect to get that over time. So even though you've got a sale, you said of 30,000, the cash that we have is only 3,000, and the rest is a receivable.
It's a receivable. Yeah.
Oh, okay. So this is an homage to Christine Smith.
Yes.
So that's the way that works. You get the same calculations then that happened in August and September. So those are pretty much the same. You still get down to credit sales here. And then if you wanted to summarize the quarter, so in a quarter we've got these 3 months, July, August, and September. All you have to do is just add them across, right?
Yeah, just total them across.
Okay. Now, so
I remember
they're
just
like
just
that.
the quarter summaries it's kind of an artificial, just an archive of the calendar.
Oh, okay.
Our business is ongoing. Nothing stops at the end of the quarter. But just that's a good place for us to measure where we are.
Okay, and accountants kind of like quarters.
Yep.
We like months. We like specific time periods because that also allows us to kind of compare different periods
Exactly.
within the same fiscal year, across fiscal years, whatever it might be.
Apples to apples.
There you go. So ultimately, that's small plates on the sales budget for today. We'll come back with a production budget. Oh, I know that's exciting.
Oh, boy.
And yeah, exactly. And we'll see you again in a little bit. Bye.